Hi guys, thanks for tuning in to another episode of Nuggets News. We're back with our friend Will from Mining Store for our monthly crypto mining update. We're going to cover all the coins that are profitable to mine, what's going on with Bitcoin's hash rate after the halving, a pretty cool little chart that we're looking at the cost of production and how that's all changed. So yeah, thanks for joining us again, Will.
No, not a problem, Alex. It's good to be back on. And yeah, I'm looking forward to going through the Bitcoin production. I think it's, a really important thing for people to actually understand, what actually makes, the price of Bitcoin be what it is from a miner's point of view. So we'll tap into that, no doubt. Let's get into it.
And anything in particular, just like generally overall that you're seeing? I know you guys said that you sort of run out of hardware, so people are obviously interested. We've seen an influx of newbies into the space. A lot of them are getting into mining.
Yeah, absolutely. I mean, it's always good to see the newbies come through. We've got to grow this space somehow, and those are the people that are going to help us grow it. From a hardware perspective, we have definitely sold out on all of our hardware at the moment. We had an end of financial year sale. We actually released a sale to our community and sold about 150 units within a week. So we were going to expand that out to the Nuggets News community. But it might have to be next month that we offer something special for them.
No worries. That's all right. That's good to see that people are getting involved. Do you want that Discord noise, mate? Can you shut that down?
Yeah, I'll close the Discord, mate. It's the community. Sorry about that.
It's
close that off.
Going nuts. That's a good problem to have. That's interesting as well. So we'll get into the slides. We'll talk about it as we go. But I'm really surprised to hear that, because I would have thought maybe that mining fell out of favour a bit around the halving. But you've got the other topics you want to cover today, particularly end of financial year, as in Australia we approach June 30. Again, this is always just a general overview. I think you guys use Adrian as well. We've done a video with Adrian, so we've got to just say that double check with your accountant and don't take any of this as personal advice.
Yes, of course. Get the disclaimer out there. I'm definitely not an accountant myself, but the slides that I will show are directly from Adrian. But get in touch with him. He's unbelievable. He's helped out both members from your community and mine. But yeah, on the Bitcoin mining side of things, it's definitely we're going to look at a slide that compares kind of the profitability before halving last month and this month. And you're right, things are a little bit slow on the BTC side, but there's been some pretty awesome opportunities on the FPGA side. So we'll tap into that later, though.
Yeah, I think definitely sort of relates to the altcoins, which have been favourable at the moment. But you've got the first slide there, Will, the instant asset write-off. So this is kind of like a stimulus thing that the government has. Did they increase it, or did they just extend it?
So they increased it. It's up to 150,000, so per item as well. So you can instantly write off the assets once you purchase it, up to 150,000. Obviously, there's a couple of other things you need to be aware of, but for our miners, that was a big one and a large reason for the big push in the sale. A lot of people are kind of locking in this tax year, purchasing those assets, taking advantage of that instant asset write-off. And yeah, kind of expanding on their operations with the compound mining model that we've been following. So yeah, definitely an interesting one. I mean, there's always ups and downs in these kind of times, and everyone's watching stimulus packages and how to take advantage of them. But from our community side, that was definitely a big one that people are taking advantage of at the moment.
Yeah, that's really interesting. I hadn't really thought about it from a mining point of view. Everyone always goes over in their head, oh, do I need a new this, that, or the other to write it off for tax as we approach that time of year? But obviously mining's one that's capital intensive and you can write it off in Australia. So maybe that's very good for the overall crypto industry in Australia.
Yeah, no, it's definitely, it's been something that definitely our community has taken advantage of. It's probably better than buying the new car and rolling around looking flashy, putting it into an investment. So yeah, it's been definitely a great one to take advantage of this financial year.
Cool. Okay, so Bitcoin hash rate analysis. I'll just zoom in a little bit on those charts for everyone at home. But it's had a pretty sharp rebound, a little bit like the stock market and crypto, to be honest. And we weren't really expecting that, were we?
Definitely not from Bitcoin mining side of things. I mean, in the next slide we'll look at how the profitability has been affected, and it doesn't quite make sense exactly in a short-term perspective why the hash rates come back up so far. From profitability anyway. But yeah, I mean, it's a good thing, I reckon. It shows that people have a lot of faith in the long-term future for Bitcoin. They're willing to, mine at a break-even price or a slight profit and hold those coins for the next 1, 2, 3 years and sell them at the right point in time. And at the end of the day, that's what mining really is. It's not a short-term investment. It's an investment that you are looking kind of, 1, 2, 3 years ahead. The life cycle of the miners can last that long. And so, yeah, I think personally that's why we have seen the hash rate come back up. Obviously, the slide below as well, I mean, the image isn't the largest image, but you can see that the price has come back up as well. And so if we actually want to go into the next slide there, Alex, we'll have a bit of a comparison there between, you know, before halving, what returns were. And we can see returns were close to $6 a day. And then, you know, last month they were as low as $2 after the halving. And this month they're still sitting around $2. So comparing that to what's happened with the network hash rate, although the network hash rate has come up substantially, so has price, and they've kind of evened each other out. And that's why we're seeing a $2 a day average still sitting there for Bitcoin miners.
Yeah, that's really interesting that we've got that sharp dip and that sell-off. There was a bit of panic around, and there was these different narratives that people create about it, the death spiral. And here we are again, sharp decrease where maybe, you know, unprofitable miners turn off, and then we see the sharp recovery. But this time price didn't really, like, it kind of had two attempts to sell off, but I think that just shows the support, and we definitely saw waves of newcomers into the market, just general strength, and that buying opportunity, that capitulation that we spoke about. I think it only got that low because of BitMEX and the genuine order matching that drove price down. And I think when you looked at the same thing happened with hash rate and price barely budged, I think that sort of confirms that theory.
Yeah, no, 100%. It's a good kind of comparison that you make there. I think the next slide that we're going to look at is understanding that Bitcoin kind of production rate. And from a miner's point of view, how does the cost of miners, the cost of the electricity, and what is actually producing new Bitcoin into the ecosystem, how that is kind of affecting price as well. I'll put my opinion on why I think we keep hitting this 10,000 rejection rate and coming back down to the 9,000. You know, full disclaimer, there's a million things that affect Bitcoin's price, just like any market. But from a miner's perspective, it's important to understand this, and from a trader's perspective as well. So on that note, probably we'll go on to that slide, Alex.
Yeah, I've got that up, and I'll put the link below as well. So guys, you can click on this link and open this up in TradingView yourself to look at. There's a lot of noise going on. We'll let Will talk us through that. But basically, this is trying to measure the average cost of a Bitcoin.
Yeah, absolutely. So this chart here, by no means did I create this, but it was sent to me one of the community members, Squats and Coins. It's obviously his online alias, not his real name there. But I'll try and work through this. As Alex said, it looks quite loud at the start, but there's really one main thing that I look at on this chart to help me divulge, you know, what's actually going on from a Bitcoin miner's perspective, and then comparing back to the price. So at the very, very top of this chart on the y-axis, you can see a purple ribbon there, and it's saying Bitcoin's production costs. And basically what that is, it's looking at how much it would cost to actually produce one Bitcoin in a year. That takes into factor the cost of the hardware, which can come between $2,000 and $3,000 US, as well as the cost of the electricity to run that hardware. So one Bitcoin miner is by no means going to produce one whole Bitcoin a year. So you'd have to get a couple, and that's why to produce one Bitcoin, it comes to around about $15,800 US. Now, there's obviously been a dramatic increase there. And if we take our eyes across to more of the main chart itself, we can see this red kind of ribbon forming, okay? Now, before the halving, you know, the price of Bitcoin production was about half of what it is now, because the reward was double what it is now, okay? So, you know, as soon as we see this halving, and it's pretty obvious on that red ribbon where the halving has occurred, because that ribbon's gone well up to the top, you know, now it's actually costing Bitcoin miners more to produce Bitcoin than what the price is, okay? So, Alex, do you have any comments on that before I jump into, you know, a further point that I want to elaborate on? But does that, you know, hopefully, as I say, it is quite noisy what's going on here, but hopefully that kind of helps people understand what this chart is showing. Yeah,
so it is actually pretty hard to see, but guys, the purple total production cost, it's very thin here. It's sort of like the cloud, the Ikimoto cloud that some people trade. And you'll see here that it jumps from being under the price to way above the price, and that is the halving taking place. And so now you see that price is well below that cost of production, and so the cloud fills in as this red color. So that's the way that I interpret it, which
Yeah,
it is a little
exactly
bit hard to see, but yeah.
Yeah, of course. I thought I'd just hand it over to you, obviously, because you've got the live chart there and you can probably move the cursor over, but that's exactly what we're seeing here. Now, when we want to make, a trading strategy based on this, or we want to kind of, understand, okay, what does that actually mean for me if I'm holding Bitcoin? Basically, in really short form, what it means to me is that Bitcoin is quite heavily undervalued at the moment because it's costing more, and miners aren't really willing to sell their Bitcoin at this price because it's actually costing them more to produce it. So one of two things needs to happen here. We either need to see the network hash rate come down quite a lot, and that means that miners are actually getting more Bitcoin for every block that they're mining, and they're not sharing it with so many people, and that will bring down the production costs. Or we need to see price increase so that they can actually start breaking even. Now, relating that back to what's going on in Bitcoin's, you might see on social media people referring it as almost a stable coin at the moment. It's kind of hitting 10,000, coming back down to 9,000 and staying really stable. It's not too volatile. I think from a miner's perspective, what we're seeing here is Bitcoin miners are trying to make up that difference in production costs by selling at 10,000 and buying back at 9,000 to make that $1,000 kind of margin. That's in real simple terms. They're obviously not excelling at those exact dollar values, but they have to kind of participate in the trading a little bit so that they can make up the difference of, $5,000 extra cost. So yeah, I mean, as we said at the start, this can look a little bit loud, a little bit noisy. I might even try to contact the developer of this kind of chart and see if we can get a bit more of a cleaned up version of it, where we just have the ribbon in place. But definitely one that I've been following for quite a long time, and it just gives you that perspective from a Bitcoin miner's view of what's actually going on and the price to produce Bitcoin.
Yeah, and in my mind, I'm just thinking out aloud here. If I was particularly a big Bitcoin miner, I would be thinking about shorting the FTX hash rate index and possibly going long the price, because you're basically trying to trade that gap, that spread that you're betting is going to narrow. So I might put that trade on in just a small amount, and we'll see how that plays out and talk about that next month.
Yeah, really good idea there, Alex. I mean, it's always awesome. A lot of people hear about these theories and they try to implement it with their main trading balance. Like, never do that. Exactly what you said. Just put a really small amount on, see how it plays out over a month or two, and then start implementing into your trading strategy if it worked out well. But yeah, really good idea. I reckon it'd be a cool thing to actually track that.
Well, let's not say good idea yet. I might lose a heap of money and I've got something wrong. But no, that's what I think the hash rate index is kind of there for. But what slide are we on now? I think we've covered everything there as well on slide 7.
Yeah, just a bit of a summary there if you want to leave it for a couple of seconds that people can come back to, pause the video. It's basically what I just covered and the main points there. But yeah, definitely can flick over onto some of the taxation things now.
Cool. Okay, so mining as a business, and you guys obviously see the hobby miner with one computer all the way up to someone that's bought a heap of rigs. So again, as a general overview, and Adrian's got his logo there, good advertising. But any, I guess, general tips or things that you see in here?
Yeah, so I mean, we did obviously you've done a video with Adrian from a trading perspective, and we did one from trading and then also mining perspective. So I have taken this slide directly from Adrian's video. But basically, what I want to cover here is, just there's a big difference between trading as a hobby miner, where you probably have a desktop computer set up, you're on NiceHash, you're earning a couple of cents or maybe $1 a day, as opposed to and the distinction probably comes when you get involved with someone like Mining Store, and you're taking it a little bit more seriously. You're starting to put large amounts of capital in, $10,000, $20,000 worth of hardware, and now you're really running things like a business. So there is that distinction there that, if you're hobby mining, you're not really running it as a business. You're not worrying about cash flow. You're not worrying about expenses. But once you start to invest a bit of capital and you're really setting up this passive income, that's when you're probably running things as a business. So a distinction there. What that means is when you are running things like a business, you can claim things like the expenses of electricity, expenses of the hardware. You can depreciate those assets, which is what a lot of the members did recently in their expansion. We saw, a great number of people going from 5, 10, 15 miners to 20, 30, 40 miners, and really taking advantage of this instant asset write-off. obviously seek your own advice. It's not my suggestion to do this, but it's just what we're seeing within the community. But yeah, that's the biggest distinction there between hobby mining and running as a business kind of mining as well.
Yeah, and I would probably just throw in there, like a lot of things that crypto related, if you're, depending on your situation, a lot of people we know can claim things like membership to our group or your mining group. Even in their self-managed super, it's possible. So it does depend on your circumstances, but a lot of people don't realize that some of these things, these subscriptions and anything to do with your business can be deductible. So we'll get this out either today or tomorrow, but before June 30.
Yes, exactly right. And yeah, exactly what you said there, Alex. Things like subscriptions, education courses. We've even had extreme circumstances, not extreme, but just circumstances where people are hosting their own miners and they've been able to actually claim the rental space that those miners are taking up. So yeah, really go and speak to someone like Adrian. Don't put a blind eye to it and go, cut tax or setting things up properly is too complicated for me. You can save a substantial amount of money and really change an investment by setting it up with the proper structure. Interesting.
Charging your ASIC miner out in one room of your house. That's kind of Airbnb style there.
Robots taking over, mate. It's like charging someone rent to live in there. So they definitely has been done. But of course, set your own tax advice as well.
And then you've got the different types of structures, and a lot of people these days do have the trusts to push money into and disperse it more evenly. So there's a lot of reasons that you would do one or the other, but it does depend on like how you want to conduct your business or your trading or your mining. So yeah.
Yeah, no, that's exactly right. So, I mean, those different structures there, if we're on that slide now, obviously, you've got your personal, you're a sole trader, you're probably just doing it on your own. You're not probably scaling up too much, maybe 5 or so miners. It's just a very basic structure. Your partnership can really come to things where you've got, husband and wife or 2 brothers, and they need to structure things to, obviously benefit both of them, not just one of them. Trust, as you said, Alex, you might be 50 years old and have a couple 18 to 20-year-olds that are still at uni, and you can set up that trust structure and obviously have them take some of those disbursements of income. And then company, obviously, we've got a 27.5% flat tax rate, which can really help with that compound mining model rather than, distributing that income to yourself and paying, maybe up to 50% tax. If you're a high income earner, you can kind of cap it at around 27.5%. And then the final one, obviously the self-managed super fund. We have a lot of clients coming to us now who have been approved to run their mining operation under the self-managed super fund, simply because it's passive, it's through someone that's exterior to them. And there's a massive benefit of a reduced tax rate of 15% for that. So again, don't want to harp too much on the accounting advice. Definitely go and speak to Adrian from Crypto Tax Australia. Most of the people that come through Mining Store, I'll have the initial consultation with them, talk to about expectations, what to expect from mining, understanding it's a long-term investment. And then I'll basically say, what's a comfortable level to start for yourself. If that's 1 miner, then that's great. If it's 10, then that's cool. That's up to them. But definitely then go and speak to Adrian about setting things up with the right structure.
And it looks complicated when it's all in front of you guys, but just spare a thought for everyone that's trying to deal with DeFi these days. I was thinking about that the other day. We got lending on top of lending, and you're getting fractions of coins, and then they give you this coin, and you can mint this coin to earn this coin. And man, oh man, I'm not jealous of Adrian when DeFi, everyone starts doing their DeFi tax next year. But
that poor man is going to go through a lot. But again, I think it really comes down to getting the right structure and record keeping and habits from the start. There's nothing obviously worse for Adrian or yourself that you kind of get 1-2 years down the track and then you're like, oh yeah, I haven't really been keeping track of the exchanges that I've been using and the rest of it. So yeah, get things right from the start, realize the benefits and the disadvantages from the start, and yeah, save yourself and Adrian a headache, I guess.
Cool. So we've got the coins to mine up here. There's a few there that we've mentioned in previous episodes. Digibyte has finally got on Binance, so that's been a little bit of a boost for the price.
Exactly right. So, I mean, basically Digibyte is there. So one thing I'll mention we have built this kind of software onto our own website now. The returns are very inaccurate, so please do not take those as a given. For example, DigiByte's showing us a negative profitability there, which is completely false. But at the end of the day, at least we can show people which coins are actually mineable. People that come across to us, the best way to really know what the returns are is just to turn your miner onto it for 24 hours and get an accurate reading. But nevertheless, at least we've got this on the website now. We will be developing it further over the coming months to make it more accurate. But we can see here a range of different coins. So DigiByte, Handshake, TRB, and Aeon are probably the more profitable coins to mine at the moment. DigiByte particularly, I'm very bullish on. As Alex just mentioned, it's was released on Binance. Potentially could be coming up on Coinbase as well. I think it's a really great project. I mean, it's I suppose you could compare it to Bitcoin a little bit, but more decentralized, some people would argue. Do you have any comments on DigiByte that you want to share with the audience, Alex?
I mean, it's definitely one that's got its strong, loyal community, and when they've been around for that long and they're genuinely mined compared to the big pre-mines and that type of thing, I think it's got all that longevity in its favor, and it has been developing, whereas some coins you can argue like Litecoin or Dogecoin, the other OG sort of coins, have got a bit stale. So yeah, it's not one that I would be able to tell you projects that are building on it or anything like that, but it's there's a lot happening that I probably need to read more up on.
Yeah, of course. I mean, there's a million projects out there. I mean, it's always the case. Someone, asks me, what do you think of this project? And I say, oh, give me another 24, 48 hours and I'll have a proper look into it. But yeah, it is, particularly on the mining store community, we're quite bullish on it. It's had a bit of a downhill road since 2017, and it's really starting to show its flavor again. So I think we've seen about a 400% or so rally over the past couple months. I think we've got a bit of a price floor now. And now with these, Jared was kind of, if you can call him a CEO or a project lead, I guess, has been removed from the project. And now I think a lot of doors are opening up. There wasn't really anything wrong with Jared, I don't think, but I think the project just needed a new sense of direction. And clearly since he's left, things like a listing on Binance have happened, potentially Coinbase. So I think it's opened a lot of doors for the project. Definitely one to keep your eyes on. And it's been an awesome one for the miners on at Mining Store.
Yeah, so I think that the Binance listing and that was a little bit of spite because there was a bit of history there between those two. But hopefully a fresh leaf being turned over there for DigiByte.
Yeah, I think exactly what you said. It was exactly that, a bit of a spite thing. I didn't want to mention it too much, but yeah, it's kind of the way it seems to have come out.
So next month you're talking about a lot of questions you're getting specifically about the FPGAs and how they differ from ASICs. So guys, if you've got any questions on any of that, as always, drop them down below, and we'll talk about all that in more detail next month. But the alts, I guess just in general, yeah, the alts have been going really well for traders or for miners. When these things start popping off, it's good for everyone, and it creates that sentiment and that builds on itself. So yeah.
Yeah, absolutely. I think next month will be, me and Alex were talking in the pre-interview, I suppose. We don't know what's going to happen next month. Something could absolutely take over the whole episode, and we will focus on that. But the most questions I've been receiving, particularly from Nuggets and abroad, has been about FPGA mining, why that we use FPGA miners rather than ASIC miners, what our strategy is, what our hosting facility involves. So I think next month would be a good opportunity to go through all of that. And just before that we finish up, Alex, basically, I'll give it just a little bit of a lead into it, that the ASIC miners, what tends to happen in this market is we will see, a coin be released, and it takes a lot longer to build a piece of hardware than it does to build a piece of software. And so what tends to happen is, these ASIC miners take 4 or 5 months to come out, and they're a lot more powerful than FPGA miners. But FPGA miners can build a FPGA bit stream within 1 or 2 months. So we get onto the network and reap those rewards a lot quicker. And then by the time that the ASIC miner comes out, we develop another bit stream for a different coin. So yeah, I mean, that's just a little bit of a lead into what we'll go through next month. We'll talk about hosted solutions and the rest. But any other points that we want to cover on the mining side? Any questions, Alex?
No, I mean, I'd just be interested to maybe get up some examples and have a look at some charts to see if those obvious differences of when it's been heavily FPGA mined and then, you know, they dump and then ASICs come online, and if you see any of that reflected in the charts versus something that's just purely proof of work and smoother, I guess.
Yeah, exactly what I think would be the best way to go through. Even for mining store members, I'm starting to try and educate them on, you know, it's not really about the dollar a day mined. It's really about, you know, you're mining a number of coins and then you sell it at a point in time. And what we look at when we're trying to find the best coins to mine is coins that not everyone is mining. So looking at things like the network hash rate is a really important thing. At the end of the day, the more network hash rate, the less reward you receive as a miner. And we can look at examples like Handshake, like CKB, that we were getting ridiculous rewards for a period of time. Then these ASIC miners come out and the network hash rate just skyrockets. And that's where we go, okay, move on to the next project. So definitely something we'll dive into, try and educate everyone a little bit more. But yeah, it's been awesome. We've had actually a few Nuggets members come over in the past month or two. So yeah, keep it up, guys. And any questions you have, just reach out.
Awesome, as always. The links are all down below, guys, to check out the Mining Store website. There's discount codes if you end up buying anything, and it's a fantastic little episode that I think is going to become more and more relevant as we get more and more altcoins popping off and these exchange listings, and it's just starting to feel like 2017 a little bit.
Yeah, it is. It's got those feelings. I think, you know, this ceiling at 10K Bitcoin is dampening things a little bit. But as you say, like, you know, there's so many projects that are actually really strong now and have a lot of faith. You know, it's moving away from just Bitcoin dominance, I think. So yeah, it's all evolving, and yeah, it'd be good to keep reporting on it as we go.
Fantastic. Well, thanks, Will. Thanks, everyone. Hope you guys have enjoyed that one, and we'll catch up again next month. Cheers.
No worries. Cheers, Alex.
See ya.